Hey guys, it's lylexD here. Welcome back to my YouTube. As you see in the background here, I got my Christmas tree up. Merry Christmas, everyone. Um, I got another pot stock talk for everyone here. I'm going to be talking about the stock market crash. Firstly, I'm going to talk what is a stock market crash, potential reasons for a stock market crash, and what to do if the stock market does crash. I will also be touching up on bear market and recessions, that sort of thing. So we'll get started. Articles on the Globe and Mail started to read investors are gittery, whatever gittery means, but basically people are starting to get scared. CNBC, they posted the biggest stock market plunges this year. It's actually really good. I have it posted up here now. Monday, February 5th, as you see, dropped 1,175 points. February 8th, 1,033. And just as you see on the side there, that's 4.6 and 4.2%. Not really that much, but I mean, it's also quite a bit. I would say a lot of the reason for this is, well, we've had an amazing couple of years. Uh, do you think that what was just posted there looks like a bear market? Remember, a bear market is when the market falls 10% or falls another 10%, resulting in a 20% total decrease. So 20% is quite a bit. Looking back at that picture, 4.6, 4.2, 3.2, 2.9, maybe over an amount of time, 20% isn't actually that much, but for a quick drop, that's lots. Um, right now, there is not a bear market. Well, it's beginning to be a bear market, but I don't think it's quite there yet. Recessions typically happen because of a bear market. So the company uses the stocks to grow. So when the stocks are down, they have less money to grow. So if they're a company that's not a big income producer, they're going to have to start laying off their employees, which overall means less money for everybody, if you think about it. So really, it just makes it worse from there. It just gets worse and worse. Um, so next, I'm going to get into the potential reasons for a stock market crash. I did mention one before. I'll get started with tax hikes. That actually was just posted in TV news not too long ago. The feds are raising the taxes. So when that happens, it causes panic in the market. Frightened sellers, they start to get panicked. They'll just sell because what they see in the news. Um, it also causes excessive leverage. Excessive leverage is when a company has lots of borrowed money or shares and are forced to sell due to the decline, causing an even bigger drop. If these companies have tons and tons of money and they sell lots, well, it's gonna drop the market. Another thing very similar to that is quantitative trading. That's when people or companies use computers to create trading algorithms. So say there's a giant hedge fund. They have thousands of computers. They have all these computers set to sell at whatever price. It drops over 2 months. They end up having to sell at that price. So say they sell, who knows, a million shares of whatever company. Obviously, that much would drop. A million shares are quite a bit, but still, that would drop. Um, in my personal opinion, I think another big reason that the stock market is doing a lot of what it's doing right now is Trump. So all of the shit going on with China and the trade war, all that kind of stuff, and basically everything Trump is doing. So lastly, I'm going to talk about what to do if there is a crash. I'll tell you what I'm going to do, and that's going to be holding my stocks. Um, I would say hold on to all shares that you have because typically a stock market, when it crashes, it starts to fix itself within 3 months. Now, that could be just begins fixing itself, or that could actually fix itself pretty well. This is not always the case, but a lot of times that is what happens. One thing that I try to always remember with the stock market is panic leads to sell, greed leads to buy. So I always remember that because you'll get panicked and you'll sell right when the stock drops, and typically you want to sell when it goes up, not when it goes down. And then say, for example, it drops, you sell, and then it goes right back up. You think, oh no, I'm going to miss out on this crazy deal, so you buy. That's greed. Uh, in that circumstance, that's buying and selling on the worst times. And that's kind of what can happen in a stock market crash. You get scared, you think, this is going to lose all of my money. Um, One thing you got to remember, especially if you're a long-term investor, which I am right now, because I'm not doing day trading at the moment, um, you're betting, so to speak, on a company. You're not betting on the market, so the market can go up and down, but you're still betting on a company, not the market. Um, just because the market goes down doesn't mean your company is going to fail. If you did your due diligence correctly, your company should be able to go through the market and live on, because that's the kind of company that you want. Um, Maybe if I can, I'll buy more stocks during this time. The only thing is I don't know when it's going to stop going down. So you could buy and lose a lot. And I like to do quick day trading. I don't like to put all of my money in long term. I, most, I guess, but day trading is still a lot of fun. Um, but overall, I would say your best bet for the market is have a diversified portfolio. I currently have mostly pot stocks. Pot stocks are not doing very good right now. Tech stocks have also been plummeting, even though they've been doing like very, very good in the recent past. So just keep those things in mind, and if the stock market does crash, you'll be set. Thanks for watching, guys. That's all I have for right now. Don't forget to subscribe. If you see there, I got Lola in the back. Lola, Lola. There she is. What a good girl. Subscribe for Lola, guys. Peace!